Are you confused about where to start your journey in investing, the stock market, or real estate? It's a question that almost every beginner asks, and the answer isn't as simple as one is better than the other. In this video, we're going to break it all down so you can make an informed decision that fits your goals, lifestyle, and risk tolerance. I'm going to take you step by step through the key differences between these two popular ways of building wealth, including potential returns, risks, costs, and how much effort you really need to put in. By the end, you'll understand not only which option might be better for a beginner, but also how to avoid common mistakes that can cost. Hey everyone, and welcome back to the channel. Today, we're tackling a massive question that almost every investor asks at some point: should I invest in stocks or real estate? Both can be incredible wealth-building tools, but they are fundamentally different beasts. So, if you're trying to figure out where to put your hard-earned money, you've come to the right place. We're going to break down the pros and cons of each, so you can make a smarter decision for your own financial journey. Let's start with the one you probably hear about every single day: stocks. When you buy a stock, you're buying a tiny piece of a publicly traded company, like Apple, Amazon, or Tesla. The main goal here is capital appreciation. You buy low and sell high. One of the biggest advantages of stocks is accessibility. You can start investing with just a few dollars thanks to fractional shares. You don't need a huge down payment. You can open a brokerage account on your phone and buy your first stock in less than 10 minutes. It's that easy to get started. Another huge plus for stocks is liquidity. What does that mean? It means you can convert your investment back into cash very quickly. If you need money tomorrow for an emergency, you can sell your stocks, and within a few business days, the cash is in your bank account. Try doing that with a house. This flexibility is a major selling point, especially for those who don't want their money tied up for long periods. And let's not forget diversification. With stocks, it's incredibly easy to spread your money across hundreds or even thousands of different companies, industries, and countries. You can buy an S&P 500 index fund and instantly own a piece of the 500 largest companies in the US. This diversification helps manage risk. If one company or one sector is doing poorly, another might be doing great, balancing out your overall portfolio. You're not putting all your eggs in one basket. However, stocks aren't without their downsides. The biggest one, volatility. The stock market can be a roller coaster. We've all seen the headlines: markets can drop 20 or 30% in a matter of weeks. It can be emotionally taxing to watch the value of your portfolio swing so wildly. It requires a strong stomach and a long-term perspective to ride out those downturns without panic selling at the worst possible time. Plus, you're a passive owner. You don't have any real control over the company's decisions. You're just along for the ride, trusting that the company's leadership will make good choices to increase its value. Alright, now let's switch gears and talk about real estate. When we talk about real estate investing, we're usually talking about buying physical properties like a single-family home, a condo, or an apartment building to rent out for income. The most obvious advantage of real estate is that it's a tangible asset. You can see it, you can touch it, you can stand in it. For many people, this physical nature provides a sense of security that you just don't get from numbers on a screen. You own a real, physical piece of property. One of the most powerful benefits of real estate is cash flow. If you buy a property and rent it out, the monthly rent your tenants pay can cover your mortgage, taxes, insurance, and other expenses. Anything left over is positive cash. Float your profit in your pocket every single month. This can create a steady, reliable stream of passive income, which is the dream for many investors. Over time, as you pay down the mortgage and rents increase, that cash flow can grow substantially. Another magic word in real estate is leverage. This is a huge one. Leverage means using other people's money, in this case, the bank's money, to buy an asset. For example, you might only need to put down 20% to buy a house. If you buy a $500,000 property with a $100,000 down payment, you're controlling a $500,000 asset with just 1/5 of its value. Real estate also offers significant tax advantages. Governments often incentivize property ownership. You can deduct things like mortgage interest, property taxes, operating expenses, and even depreciation, which is a paper loss on the property's value, from your taxable income. These deductions can dramatically reduce your tax bill, sometimes even allowing your rental income to be tax-free. But of course, real estate has its own set of challenges. The biggest hurdle is the high barrier to entry. Unlike stocks, you can't get started with just $50. You need a significant amount of cash for a down payment, closing costs, and a reserve fund for unexpected repairs. We're talking tens, if not hundreds, of thousands of dollars just to get in the game. Real estate is also highly illiquid. Selling a property isn't like selling a stock. It can take months to find a buyer, go through inspections, and close the deal. If you need cash quickly, real estate is not your friend. Your money is tied up, and you can't access it on a whim. And let's be real, it's not passive income, at least not at first. Being a landlord is a job. You have to find tenants, screen them, handle maintenance requests, and deal with vacancies. Imagine getting a call at 2 a.m. about a burst pipe. That's the reality of being a hands-on landlord. You can hire a property manager, but they'll take a cut of your rent, typically around 8 to 12%, which eats into your profits. So, which one is better? The honest answer is, it depends entirely on you. It depends on your financial situation, your risk tolerance, your goals, and how much time and effort you're willing to put in. If you're looking for an easy, low-cost way to get started, with high liquidity and simple diversification, stocks are probably your best bet. You can set up automatic investments into a low-cost index fund and just let it grow over the long term without much hands-on effort. This is a fantastic strategy for most people looking to build wealth over decades. On the other hand, if you have a good amount of capital saved up, you're comfortable with using leverage, and you're not afraid to get your hands dirty, real estate can be an amazing way to generate cash flow and build massive wealth. The control, leverage, and tax benefits are hard to beat if you're willing to put in the work. But here's the best part. You don't have to choose. Many of the wealthiest people in the world invest in both. They use their stock portfolios for long-term growth and liquidity, and their real estate holdings for cash flow and diversification. You could even invest in real estate through the stock market by buying REITs, or real estate investment trusts. These are companies that own and operate income-producing properties, and you can buy shares in them just like any other stock. This gives you exposure to the real estate market without needing a huge down payment or the hassle of being a landlord. Ultimately, the best investment strategy is one that you understand and can stick with for the long haul. Do your research, understand the risks, and figure out what aligns with your personal financial goals. Don't just follow what someone else is doing. Create a plan that works for you. What do you guys think? Are you team stocks or team real estate? Or are you like me and believe in a mix of both? Let me know down in the comments side. Love to hear your thoughts and experiences. If you found this video helpful, please give it a thumbs up and consider subscribing for more content on personal finance and investing. Thanks for watching, and I'll see you in the next one. In conclusion, choosing between the stock market and real estate as a beginner, ISNT, about which one is universally better, RIT, S about which aligns with your personal goals, financial situation, and comfort level with risk and effort. The stock market offers accessibility, flexibility, and the potential for strong long-term growth with relatively low effort, making it ideal for those who prefer a hands-off liquid investment that they can adjust at any time. Real estate, on the other hand, provides tangible assets, the opportunity for rental income, and the power of leverage. But it comes with higher upfront costs, less liquidity, and the responsibility of managing property and tenants. By understanding the pros and cons of each, beginners can make informed choices that fit their lifestyle, whether that means starting small in the stock market to build a diversified portfolio over time, investing in REITs to get a taste of real estate without the heavy lifting, or eventually combining both to balance risk and growth. Remember, there is no one-size-fits-all answer, and success in either path comes from education, planning, and consistent effort. The most important step you can take today is to start learning, start analyzing your options, and take deliberate action toward building your financial future rather than waiting for the perfect investment. The sooner you start, the more time your money has to grow, and the closer you'll be to achieving the financial freedom you're aiming for.